folks, Scott here, and this is the wrap for Wednesday, June 19th, Fed Day, or also known as FOMC Day. I think it's what Federal Open Market Committee Announcement Day. Whether or not the Fed, the U.S. Fed, is going to raise interest rates or reduce them, which I don't think they can do at this point since we've bottomed it out, but all important as it impacts interest rates and earnings. And there's just a ripple effect on many elements of our economies. So quantitative easing has been sort of the buzzword of the past few years, if they're going to continue it or not. Now, on this day, it is prone to having a historically bullish bias because whatever they do, they tend to do it in the context of providing sort of explanatory notes, support, a thorough discussion of all the reasons that justify it, and it just tends to be sort of positive the way they spin it. So more times than not, it ends up finishing as an up day. Today was not the case. As you can see from the action after the announcement today at 2 o'clock, it sold off big time. So a little bit unusual, enough so that I thought it would be helpful to show you the results of fading gaps on the day after Fed Day, and only in the scenario of when Fed Day closed down. So what the results I'm about to show you is my backtesting tool, which I call MTG Gap Trader, is fading gaps day after Fed Day, and a day in which Fed Day closed down, simply defined as closing below where it closed on its prior day. And there you go. So very rare, only 16, because these happen 8 times a year. These Fed interest rate decisions on average about 8 times a year. So for the past 10 years, you expect 80 trades. Roughly only 16 have finished down. That's what this tells you here. Now, fading gaps on the subsequent day, you can see using an end-of-the-day stop, a little bit lower win rate, but the sample size is small. But again, it doesn't look, certainly not anything strong there. Up gaps have historically had a good chance of filling, and the average winner has been pretty sizable too. Now, that's influenced by one giant winner, so keep that in mind. But still, 7 of 9 winners shorting up gaps using an end-of-the-day stop has made some money. So I'd call that a slight short bias. More importantly, I would remind you that's a terribly small sample size. And when I see sample size this small, it's a little bit more of an interesting curiosity factor for me than anything actionable. But the key point here is this hasn't happened much. I think that's the real takeaway. So might want to be a little bit extra careful tomorrow. As always, I will defer to our gap guides and my other analysis before I make my final decision. All right, let me show you. See, today's gaps were nominal. See, the Russell here was the white line right at the blue line, just opened down a tick or two. NASDAQ opened up a tick or two. YM opened down, what's that, 13 points, and the ES opened down 1.25 points. So small gaps, mixed opening directions. You know I'm not going to trade it. Just to show you my pre-market comments, we had a pretty decent setup actually in either direction had it been had the gaps been big enough. You know, they'll see, and if the old saying, if frogs had wings, they could fly, and so on. Let me show you my comments, and then I'll talk about the one trade I did today that was a winner, which was nice. But first, see, last night's gap wrap tip was generally favorable for gaps in either direction. 10-day high, not a 30-day high close. Small and mid-sized gaps on Fed Day, and using a 12:15 p.m. Eastern Time stop. Why would I do that when the announcement was at 2? Because some announcements are at 12:30 historically, or maybe 12:15. Either way, I want to be inclusive or work with the assumption that if I took the trade, the gap trade, it was closed out before Fed announcement. The only way to ensure I captured all scenarios like that was to close it out no later than 12:15 in my back testing. So that's what I did. And interestingly, it showed you what actually looked like to be a decent setup. Up gaps on Fed Day after you've been rallying actually became less attractive. And let's see, that's just above the 200. Down gaps historically have been good. So bottom line for me, gap guides are generally attractive or slightly so, mostly positive factors either direction. Key issue was Fed announcement and this time stop thing that you really need to discount all the data a little bit. So for me, I was willing to trade a down gap. The UCO zone looked really good today actually. But we need all the indices gapping in the same direction. So I'll trade small gaps that have to be gapping in the same direction. I was using a half-size position. and I was going to hold some of the position for the extended target. And as it turned out, because the NASDAQ gapped up, it kept me out of the trade, so no gap trade for me. Now these next two rows, if you look at the two parallel lines of the purple, actually the purple gets copied over by the yellow lines. That represents the 15-minute high and the 15-minute low. That's the purple and magenta. The gold lines are the first hour high and the first hour low. We use those to set up our range trades. So the first hour high obviously was the same as the 15-minute high. So let me show you the results from our 15-minute range guides for today. These were published just before 9:46 Eastern Time. And we were trading close to the lows, and look what it showed. I'm looking for 55 and 1.1 here for 3 different systems for the low fade. Clearly much better than that. Historically, 60% win rate, 1.37 profit factor, made 37% more in profits than losses roughly, using a stop a little bit bigger than its target. That's 30% of the 5-day ATR versus 20%. So low fade favored in the ES, favored in the YM. See a big difference between the low fade versus low breakout? Favored with strong numbers in the NASDAQ, favored with strong numbers in the Russell, 4 for 4. Looking at the ETFs, strong spider confirmed the ES, diamonds confirmed the YM, the Qs confirmed the NASDAQ, or I guess if you're trading these ETFs you can think the futures confirmed them, and then the Russell leaned that way, but it was the only one that did not meet my criteria. So 7 of the 8 15-minute range guys favor the low fade. If you have purchased our advanced study, which is sort of a macro market condition filter or analysis of the 15-minute range guys, looks at day of week market condition, special days like Fed Day, you would have known also that Fed Day is strongly favored. Markets have done extremely well on high breakouts and low fades. So that was further confirmation of the trade for me. So it was too good to not trade. As I explained to the room, and it made a lot of sense to people, when the data, we have a bullish bias, right, for the gap filling. We're in a zone that was good, but it was too small to trade. I had bullish end of day studies. You wouldn't know that, but I had it. Fed Day, I know, tends to finish bullishly. Actually, you would know it if you remember and had watched each of our videos on Fed Day, which are available for the past 5 years. You would know that Fed Day tends to finish bullish. Our range guides, clearly 7 of 8 favored the low fade. That means going long one tick above 1642, the 15-minute low. And the target today was, depends on how you round it. Let me show you. Either 4.25 or 4.5, right? I round it to 4.5. Some people always round down because this assumes a perfect fills, the way our analysis are done. So a lot of people went 4.25. 4.25, as it turned out. Oh, let me finish. So there were my gap analysis, the 15-minute range guides, and then the advanced study favoring Fed Day. That's too good to pass up, folks. No matter what's going on in the rest of your life, in the world, what you're thinking, what your brain is cluttered with from CNBC, strong historical probabilities from different, looking at the setup several different ways. And I told folks, this is the takeaway, I would rather, when the data is this strong and compelling in one direction, I would ask myself, which would I regret more? Missing a winning trade with such a strong setup, or getting stopped out on such a strong setup? For me, the answer is overwhelmingly that I would be much more upset over missing a winning trade and not taking it when the data is this good. So I was about as bullish as you can get on that setup. Explain it to folks. Nothing works all the time, but I would happily be, not happily, but take it like a man, like a pro. If I got stopped out, would have lost 6 points. Went long, and that was pretty much the low. It didn't really take much heat. Went long 1642.25. The high of the day was, or the high of the movement there, 1646 there, and then it went to 1646 there in a quarter, and then 1646.50, precisely to the 4.25 target. If you round it down, I rounded up. My target was 1646.75. Kid you not. It pulled back, bounced around a little bit. I was still up. I was with a client who was in town for gap trader training, one-on-one training. Didn't want to be distracted by that. Closed it out for plus 2.5 points. So I missed my 4.5 points by one stinking tick. But it was still a good trade. Everything lined up, and I really can't complain about making money. So and following my plan. So a good day, an interesting day, and tomorrow could be more of the same. So we'll see. And there you go. That is the wrap for Wednesday, June 19th. Have a good one.